In this video, myself, an ex-Goldman Sachs senior analyst, will reveal the secrets to you of how bonuses are calculated at top banks such as Goldman Sachs. Now, there are three key considerations that are made by major banks when they are calculating profit, essentially, right? So when they're calculating profit, calculating bonuses, and how much to pay you to keep you working for that company, because often they have to take that into account. What do you actually bring to the company? Where's the company at overall? So point number one is the company's priorities. The company going through transition, regardless of your performance, and what they think bonus you should earn, they need to take into account what is going on in the company overall. If they're generally focused on reducing costs, reducing the priority that is aligned to your department, your particular trading desk or sales role or something like that, they could often say, well, regardless of your performance, we're making some cuts here. We can't pay you a bonus because maybe your department overall didn't make a lot of money, even if you worked hard. Maybe the company overall needs to save some money, so we're not going to pay as much in bonuses. We need to pay our shareholders higher dividends. Things like that can occur. So sometimes the bonus you're making, regardless of how much hard work and good quality work you've done, you might not get a significant bonus if the company overall is different priorities like cost savings rather than paying high bonuses. Now, the other thing is they will also take into account a bunch of other considerations that are independent of you, and that could impact your bonus. Maybe you performed well, but your team overall wasn't performing well. Maybe the demand from clients is lacking, and that's why perhaps you have not got a high bonus, because there's a less demand for trading equities compared to trading commodities. And in that case, nothing to do with the quality of work you're offering. It's just a matter of there's a different priority in the market right now, and the client demand for your type of work is lacking. So maybe that's why your bonuses aren't so high. Now, point number two is the company's overall performance. If the company is performing exceptionally well, the market conditions are great, it's generating high revenue, they're getting positive client feedback, there's a lack of any type of risk management issues, they're managing their risk and their financial risk quite well, there's no regulatory fines, there's no scandals, no media blitz criticizing the particular company you're working for, their long-term financial goals are aligned, they can offer a high bonus now to keep you and retain you as an employee there over the long term because they know you're going to add a lot of value to the company. They're in general hiring more. It's a growing phase for the company. In those instances, you'd receive a high bonus, again, regardless of your performance. Maybe you did a slightly average performance, you put less effort in throughout the year, maybe you're busy with personal priorities, you just got on with your day job every day and did what you could. In those instances, again, you could get paid quite well, even though it's not down to you. It's just the company is quite buoyant in terms of its long-term growth, is doing quite well. The annual report showing significant profit overall, and you're getting paid a significant chunk because that's the phase they're in. So I guess those first 2 points really do demonstrate to you the company's priorities, the company's performance. They can have a significant impact on how much money you make in your bonus, and it's completely separate from what you do and the value you do add. But at the end of the day, and this is point number 3, you need to think about your personal performance, because that's the only thing you can control. So you should put in your best effort each day on a sustainable basis. Don't burn yourself out. Do what you can to do a great job. And think about what projects you're getting involved in. So these are things you can be aware of and can be active in controlling. If you're working for a particular team, try to identify which projects are the high profile projects, so you get visibility on those and you get paid significant sums for adding value to a project that's going to make the most money. Don't get involved in any time wasting, long projects that the management don't care about, that maybe you're just doing on the side yourself. Because if it's not going to be seen by senior management and highly valued, it's a lot of work you're going to do for not a lot of money or not a lot of visibility and less bonuses. So you can get involved in the projects that are going to earn a lot of money. And also think about what is important in the eyes of senior management. Sometimes senior management are really keen to have employees who are friendly, talkative, and sociable at work. If that's the case, then you should go to work and do that. If there's other managers who are more serious, they just want you to be quiet and calm and get the work done and go home, then you adapt to that. There's all sorts of small things you can do by analyzing the workplace social environment and adapt your working style to that. So 3 key points if you are looking to earn a high bonus and understand how banker bonuses do work. Again, number 1, the company's priorities that can shift depending on whether they want to pay high bonuses or not. Point number 2 is the company's performance. The company's performance, independent of your own performance, can impact what the bonus will be. And point number 3 is the personal preference, right? Or your personal performance, right? So what is your personal performance? What projects did you get involved in? What value did you add? How can you demonstrate that to senior management? These are all important things for you to be able to take into account and demonstrate when you are justifying your bonus. I hope that helped you, give you some insight in terms of how banker bonuses do work. It's not straightforward. It's not all dependent on your work ethic. It's not all dependent on the company's performance even, because market conditions can dictate. It might be a high or low demand for what they're providing. So that was good. Thanks for listening. Check out the 2 recommended video on your screen right now, the free ebook in the description, and I'll see you next time.